Good morning, traders, and welcome to the weekend update here for July 7th, 2024. So, just walking through various positions. The first one I want to cover is the QQQ trade that expired yesterday. Now, I went ahead and just closed mine out because I could do so for a few pennies. If you let it expire, the results will be essentially the same. And the bottom line is this trade had a decent return, 36.3%. $430. It had a few adjustments along the way, but not as many as some of the crazy trades that I've had here over the past few months that required 10, 12, 13 adjustments. So as you can see, the fewer adjustments that we do in a trade and still keep it in bounds, generally speaking, the better off that trade is going to be. So the Qs moved up quite a bit. The fact that I did have to adjust this a number of times as those Qs were moving obviously put some slippage into the trade, took a little bit out of it, so to speak, but still, very nice return in 25 days of 36%. So that QQQ trade is going to get moved here into the closed trade archives. Those of you that are members of the alert service, of course, you can go in and replay any and all of these trades. You can go watch the progression of these trades. I think there's probably over 100 of them now. So part of the service is to be able to go back through and see each one of these trades, win, loss, or draw, and play back through them, looking at when I opened them, any adjustments I made, when I closed them, etc. So a lot of great learning in that area. So from there, let's take a look at our current existing trades. This is what I like to see and haven't seen for a few months. The past couple months were a little bit of a challenge, as I mentioned, because some things moved a lot during the course of a trade, required a lot of adjustments. Some of them I was able to still get out some decent profitability in the 10% range. The one of Apple, of course, with Apple with their massive move down and then the huge gap ups, couldn't recover from that one. Anyhow, bottom line is everything is green on the screen right now. Great position to be in. And this is usually where I find myself. And again, doesn't mean they're going to stay green, but right now I like all these various positions. This particular one, FedEx, was going pretty hard against me to the upside after I put on a call vertical. But then again, my contention was that FedEx wasn't making higher highs, that it got up into that 300, 302 range and just traded sideways. And it was traded sideways on lower and lower volume. So my expectation was that there was likely going to be a pullback. In fact, let's just take a look at that. That's a good one to look at from a standpoint here of just learning some technical analysis. So there was this massive gap up, which is when I put on that call spread. FedEx gapped up here to about 280. So I sold the 295 call spread. Now, this was prior highs on two occasions. My expectation was that these would probably still remain close to the prior highs. FedEx did, however, continue to run up, but then when it got up to that 300 mark, which was my line in the sand, it started to sell off over a couple days time period. And let's take a look at this in a 1 hour time frame instead. And so we got up here to that little over 300, but then it just slowly sold off. We can see the volumes getting less and less in that range. And my expectation as it was forming this wedge was that, you know what, I think that when it drops out of this wedge, out of a wedge, you're going to have two things happen. Either it's going to rocket up or it will fall back. My expectation was, because of this huge gap, that it was more likely to drop back. My expectation also was that if it dropped back, it was going to drop back right around to this 293. So that's what happened last Wednesday before the 4th of July. And it fell back out, it fell out of this wedge and it dropped right down to that 293. So when it did, that was my signal then, because that was a logical stop for it. A logical place for it to likely stall based on this pattern of 1 hour charts, but let's also take a look at the daily pattern because it also made a little bit of sense on the daily chart because these prior highs were right in that same general range. So when FedEx dropped back to that location, that's when I went ahead and I sold the put side of this trade as well. And that brought in additional premium, reducing the overall risk in the trade, centering the trade up for where I now expect it to continue its decay. And now I'll see about thinning this out throughout the week next week, because it does expire next weekend, or next Friday. Then got the rut trade. This continues to move along just fine. Again, I keep thinning this out a little, There's an order to thin this out there right now. I should also say there's an order to thin FedEx out there now too. We're down to 2 condors, and I'm looking to take one of them out when my conditions are hit. It's possible I may need to do something different on this if the price moves significantly one way or the other. But for right now, I'm just leaving that order set out there. Same thing here on rut. Just keep thinning this as I go. And again, some nice profitability in this, about $2,000, 26%. This trade was just opened, this double calendar. This was opened on Friday. Game plan here is to see if I can get some decay in this general range, which is a pretty decent range, 5,500 to 5,600 and change. But keep in mind, on a time spread, this tent will move based on volatility. This tent could get wider, this tent could get narrower. The tent in a time spread is not like a tent in a butterfly. It's not like a tent in a condor where all of your expirations are the same day. These are solid tents. They're not going to move on you. This, because of the difference from the front period to the back period and how those volatilities will vary from the front period to the back period. These tents can move all over. They will expand, they will shrink. Now, if you want to know more about that, when I put on this trade, I have the Deep Dive Calendars and Diagonals class. I'll put a link to it down below here as well, that gets into all the nuances of trading these, and it also gets into trading them around earnings season. This is my favorite trade going into earnings. And again, I show a whole bunch of examples in that class, and I show how to adjust them when it goes against you, to the upside, to the downside, etc. And I will personally be using this during the earnings season, which will be starting next week. Then this particular trade in SPX was opened, 11 days ago. It's chugging along just fine. It's up $155. I did one adjustment in this so far where I raised the right wing to where there is zero risk of loss in this trade. I believe that it's going to be about a scratch to the upside if the market rips up. But if the market rips up, I now can continue to raise this right wing as the likelihood of coming down into this area becomes less and less if the market continues to show good strength. If the market does pull back, we can see that I have, close to 200 point down is only going to have a minor impact on this trade. So I've got a really nice range based on the bullishness of our current market where this trade can play. I will be looking to probably see about getting on another rut trade possibly here, maybe this next week if conditions are right. A couple things I'm looking for is maybe a little bit of pickup in volatility with a little bit of a pullback might be a good opportunity to add one, or at least a pullback to the middle of the range in rut, and it's close to the middle of that range right now. Something to where rut might be predictable within a certain range so that I can do a butterfly and have an expectation of it staying in a certain zone. So again, I'll be watching that throughout the week and probably be sharing a new potential rut trade with the community either late next week or early the following. And then we have the wheel trade, which is chugging along just fine. This expires in 13 days, but there's not a whole lot of additional decay that's going to happen in this. This was the first set of puts that was sold on FTNT, which is an underlying that I would like to have a position in. So again, it's something that I determined I wanted to own long term. You can go back and watch that video, those of you that are part of the community, and see why I selected this, kind of my fundamental analysis process. And you see me go through that, and then you see me sell a put on this. Now, I'm not going to get assigned this time unless something really crazy happens over the next couple days, which I would not expect. So since I'm not getting assigned, what I'm going to do is I'm going to come in. I'm going to basically roll this out. I'm going to close up that July position, and I'm going to go out and I'm going to sell a new put, probably at a little bit different location for August. And then I'm going to see what happens there. Two things can happen. It can decay again, and I take in another, whatever it is, $200-300, all lowering my cost basis for when I eventually do get assigned stock in this. For example, right now, if this were to sell off and I were to get assigned at whatever price is down here, my entry is actually $300 less because I've decreased my cost basis by taking in that premium. But again, my goal is to now go out, sell another put at a different location, bring in more money, and then once this finally does get put to me, my cost basis will be significantly lower. So that's our current positions, the ones I have open right now, and then I'll also, again, look at possibly opening something new later this next week. So let's take a look at the markets themselves. FedEx, of course, we just did that little analysis on. Let's do SPX. So SPX continues to be an absolute powerhouse. It's just climbing, climbing, climbing. Broke out here, continues to run to all new highs. Now, something I want to point out here that may, and I stress may, start to slow SPX a little bit is I tend to look at waves, and we had this wave here. So if we go from the bottom to the high, and this, I've had this drawn on here now for weeks, and now let's just take a look. If I take this Fibonacci and I move it up, okay, look at our wave height. So the wave height of this wave is now very quickly approaching essentially the exact same wave height that was here. So many times, this is where I'm not a huge user of Fibonacci's, but I definitely use them in this way to look at specifically the entire wave here of an up move. And this is really the only way that someone has to gauge something that's broken out, because if it hasn't broken out, I can go look at prior levels. I can find what I might consider to be support and resistance at those levels. But once something is broken out and is running to all new highs, there really isn't a solid way to look at that and say, how far is it going to run? So the next best thing is to see what the waves have looked like in the past. So based on that, my expectation might be for SPX to start slowing a little bit here. Also keep in mind, earnings season starts next week. And so far, earnings the first half of this year have been pretty darn strong. And possibly our market has overrun what those earnings expectations actually are, meaning that we might be for a pullback, or at least earnings not being as strong as they've been in the past, which would create a little bit of a stall here. My expectation on SPX is maybe this 5590, 5600. I right now do not see us really going beyond this 5600 for the foreseeable future. I would expect more of a pullback, possibly a pullback just to the support line, maybe a pullback down here to the 5450, possibly even a pullback all the way down here to 5375. The most logical scenario in my mind is a pullback all the way back to this gap, filling this gap, and then potentially moving higher from there. But that would then break this particular line right here if that were to happen. And then we'd have to see if we did make a new higher high after that. So SPX, bottom line is I just don't see the ability to continue to maintain that massive up move. And then let's just look at SPY. SPY, of course, is the same thing, and I had this channel drawn on here forever. And we're also starting to hit the top of this channel. If I come back to SPX, I should have shown you this a second ago. If I were to take this line which has been my uptrend line, and I turn this into a channel, check that out. I essentially get the same thing. That also tells me that, yeah, probably not going to go much beyond that 5,600. If I did, maybe up to the top here, maybe 5,625 would touch the top of that channel. If I restrict that channel a little bit more to maybe line up a little more with this high right here, we're in that 5,600 range. My expectation there is, again, for a number of reasons, probably topping out not too far from where we are now and then rolling back over. And maybe the roll only comes back to the bottom of this channel and then moves higher. So that's SPX. And then again, SPY was very similar. Let's look at RUT first. As I said, RUT is playing in the middle of a range here. And so what I'd like to see, like I said, in RUT to potentially open a new position there is maybe a little bit of a sell-off, a little bit of a pickup in the volatility in RUT, and then that would give me an opportunity to look at maybe something like a flat fly with a long call. The benefit being that, again, this is all covered in the deep dive butterfly class, but the flat fly becomes less expensive to enter when volatility increases. So less expensive means I get a much better reward to risk ratio in that trade. So a little bit of a pullback, a little bit of increase in volatility is going to give me a better entry there. And then I would analyze that entry as to whether or not I want to use a flat fly, maybe a broken wing fly. If I use a flat fly, it might be a flat fly with a long call. So those are the couple things that I'll be weighing out here. But ultimately, when I set that trade up, I'm going to want to have it planned to play in a range that might go from maybe 1950 up to 2100, somewhere in that general range, given that RUT has traded pretty much in that range for an extensive period of time now. And all indications are that it's likely to continue in that general range. So when I do set up a new trade on RUT, that's going to be my game plan, is to try to set it up with those general parameters in mind. That pretty much wraps up this week's weekend update and market analysis. Again, I'm going to place a couple of links below for you. One of them is going to be to the Deep Dive Calendars class if somebody wants to know more about that, and then also the Deep Dive Butterfly class. And of course, go back over the weekend update reports from prior weeks, things like that, see what those look like. Those of you that are not members of the community, I'll also put a link down below so you can take a look at that. It's a pretty inexpensive way to see somebody do live trading. These are not day trades. This is longer term stuff where I get into a position, I hold that position for, in most cases, at least 2 weeks. In many cases, it could be 6, 8, 10 weeks. And I may need to adjust them a couple times along the way. More recently, there's been more adjustments, but you see that adjustment process. There's a short video that explains every move I'm making, why I'm entering the trade, why and how I'm adjusting the trade, how and why I'm closing the trade. And then basically people get to see the entire process of a slower style trader. Again, I'm someone that doesn't like to be glued to the screen. I look at the screen in the morning for maybe 30, 40 minutes, and then I look at it about 90 minutes before the close, decide if there's any adjustments to be made. In the meantime, I'm out playing pickleball, going on a bike ride, doing whatever I need to do with my day. So that's it, everyone. Take care, and thanks for checking out the weekend update.